Greetings, everybody. This is Jeff Scott. This is my weekend review. It is Sunday, July 28th. It's about noon. Let's get started. Clearly, this weekend, in the beginning of the week, is all about waiting on the Fed. I think it's pretty clear that whatever the Fed decision is, it's going to have a great impact on what the market does by the end of the week. My name is Jeff Scott, and if you ever need to reach me, it's hgsidoc@gmail.com. I'm not an educator that gets paid. I don't sell anything, although that may change with the add-on for HGSI. I occasionally will do live educational events, not to make money, but because I like to share the things that I learned from Ian Woodward and others. I've done these weekly reports for probably since 2003. I've done them just to show people how I use my different tools, because I got tired of hearing from people, and myself included in the early days, that I bought things and never used them because I couldn't figure them out. Everything I do is for educational only. I'm a doctor, not a broker. I'm independent. Everybody, I paid for everything that I use, just like everybody else, and no one pays me to say good or bad things. And trading involves risk, and you are responsible. I think it's important to find smart people and learn from them. Some of the people I've learned from are here. I just like to call out, I started with CanSlim. It was improved to me by Ian Woodward, and John Person taught me how to incorporate market timing and other things, position size, money management, what to buy. And I put it together. It gives me a style of trading that's unique, and each of you should have your own unique style. And when I do teach, I want to teach you to be your own guru, not to be what Jeff does. I have a lot of tools, and I need TradeStation, Thinkorswim more than anything else, and the indicators that are put there for live trading, although I have a lot of other broker platforms, and HGSI, EdgeRater, and the Superior Profit tools I use for analysis. Superior Profit has a plug-in for TradeStation and Metastock and some freestanding tools. I put things on the board a while back. There was an unbelievable free offer, 12-month free trials of their tools, but you had to take the offer. The offer expires end of the month. Here's a website for highgrowthstock.com, and the key thing here is free 30-day trial. But also under investing strategies, you'll see hundreds of videos, including lots for me. Stock patterns are cyclical. I said it last week. I'll say it again. It feels like we've truncated the top. And as we pull back, as we were doing at the end of last week, we get another leg up. Nothing feels different than that to me right now. And I do think we're extended again, not to a point of absolute reversal, but negative seasonality. Part of me thinks we're going to have a sell-off before we get into year end. And the Fed's poised to disappoint those that are expecting a 50-point rate cut, in my opinion. We'll see if 25 basis points is enough to keep the rally going, or do we sell off on the news? I'm on the left-hand side here right now. I'm heavy to the long side, lots of stocks and calls. I started covering my puts and short positions last week at the end. I've got less positions than I did a while ago, and I still have a big put on Amazon. I'll mention again later, but I don't think it's a unique way of protecting positions, but I thought a cheap way using butterflies that can give me pretty substantial downside protection and upside opportunity, frankly, at a fairly discounted price. If you look at how the week ended on Friday, it's a sea of green. It was a strong week. Energy has some red. Industrials had some red. But it looks pretty damn strong, to be honest. If I look at the major markets, and there's not a story here, so I'm not going to go into the smaller blow-ups. You've got new highs within the last week or so on the E-minis, the NASDAQ futures, and the Dow futures. The new high is maybe last week. If that's the case, and you've got buy signals there, you've got buy signal, all except for the YMs, interestingly. I may look at that and check that. I think they still off a little because of energy. The Russell is in a new buy signal, actually had the biggest move last week. The VIX is down in complacency, and the dollar is probably the one scary thing, if to the markets. And I guess we're the strongest kid on the block, so even with the talk of the Fed lowering our rates, the dollar's high, but maybe with the Fed cut on Wednesday, there'll be improvement there. If I look at weekly, you could see new highs on the top three within the last one, or in the case of the YM 2 weeks, you could see we've had a big move up on the Russell. VIX is flat, and the dollar has been mostly sideways, but it's at the high end of the trading range. What's underneath? Rates ticked up a little bit this week. Going into the Fed, yield curve clipped down. Now, the interesting things are, and maybe that's why, but last week I said that even though the rates were not moving up, regional banks look strong. I bought some Key Bank and some regional finance. I already had some FAS, and banks had a really good week this past week. If I look at the yield curve, it's hard to see here, but it did tick down a little bit, but it's higher than it was a month ago. That's good. The AD lines in white on the small caps on the left, large caps on the right are setting all-time highs. You can see it better here in the NYSE, all-time highs on the AD line. All my ETFs turned up except for the bonds turned down a little bit with the rates perhaps going up. Breadth remains strong. This is where prior rallies had ended, and I put this in here. We're above that line, but as you can see back in 16, we did go above that line. So, it's just a lot of clues I put together. Stocks above the 40, not quite at a dangerous zone, but up high as well. And then the 12-month new high, new low did move up a lot this week from 42 to 73, but it's not in a signal area. So nothing there tells me the market's about to roll over, just where we are in the cycle. Daily McClellan, higher highs, not higher highs on oscillators or summation index, also the same on the weeklies. So you've got divergences there. That's another signal that this market probably has some risk coming in. Buckets, we flipped. We now got 18% above the stocks above the Bollinger Bands in the S&P 1500. 2/3 are above the midline, bullish, not extreme. HINDY free zone. Well, the interesting thing is we haven't had one on the Dow this past week. The last one was on July 18. We did fire one on the NASDAQ on the 25th. I don't know what to do with these. I keep them in the back of my hat. I did check on stockcharts.com and looked at their interpretation. I looked at HGSI's interpretation. They don't see the HINDY, so I think I ignore them. Market tone. Friday was such a strong day. We had a line of kahunas, bullish moves across most major indexes. One could see when we did this back in June, which was after a tougher time in the market, that switched the market into strength. So we'll see if the bulls are back. And sector rotation, XLV, looking in here, XLE, and utilities are lagging. Canaries in the coal mine, Amazon, horrible earnings, Tesla, horrible earnings, Google, great, Netflix, bad. Did I say Google great? Because Google was great. Now we're waiting on Apple this week. And that's going to be interesting. Apple did an acquisition of Intel's motor business, and that will probably help them on 5G, and maybe that may make some positive headway in the market for them. We shall see. My Scott index, these are leaders I put together March 3rd, actually have held through all the downtrends and are close to all-time highs. And what we do at HGSI land is we put together a list of leaders, and when those leaders crack, we know it's time to leave the market. This list was put together March 3rd. It's gone sideways as the market. Well, not really sideways. It's up a little bit from when I put it together. The interesting thing is it has never sold off. Know your news and earnings, probably never more important than this week. Everything this week is going to be on Wednesday at 2 and 2:30 when you have an announcement, hopefully of a 25 basis point cut, and then a Fed head speak. I guess they're treating inflation or lack thereof, and they're treating a bad world economy and stimulating growth as an insurance. But boy, the U.S. economy doesn't really seem to need it. But if they don't give it after telling us they're going to give it, I can only imagine that the markets would sell off and be unhappy. On the right, now let me just tell you where I get that thing. If you sign up for Twitter, and I don't tweet at all, I just sign up for it for this thing, and you go into the search box and you put in earnings whispers, not only will they put this up every day and on the weekend for the week to come, but then they give you some predictions and past. It's a wonderful tool. I bet it's even better if you pay for it. I'm not even going to go through these. Some of the highlights to me: can Beyond Meat actually have a good enough report to justify its price? Illumina laid an egg last quarter, but we're in a world of big time molecular expansion in medicine, and they're sort of the engine that drives it. Procter and Gamble, Big Pharma, Merck and Pfizer, Sony, Lilly, another biotech, Amgen, Gilead, bite of the apple on Tuesday. Wednesday, GE starting to become relevant, perhaps again. Zynga, one of the charts I like of the week, so I probably wouldn't buy it. Dexcom, a leader, one of Kramer's favorites. On Thursday, you got Shopify, GM, Wayfair, Cigna. In the afternoon, one of my faves, Etsy. Tandem Diabetes, probably my best call ever. And then on Friday, you got some energy with ExxonMobil, Noble, Sempra. Here's a list of some of the big ones. And I really want to call out what I put here in the lower right-hand corner because, it's kind of cutesy and maybe no one pays attention to it. But it's a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. So what are my thoughts? We ended up strong on earnings, good earnings by Google, Starbucks, and others, despite a miss and lower at Amazon. Several markets, including S&P and NASDAQ, at all-time highs. Russell's actually up the most on the week, which has got to be good for the markets. Sector rotation is in vogue and seems to be churning underneath the indices. Fed is due, as I mentioned. Regional banks liquid last week. They still look good. Speaking of lower rates, does anyone think it's strange to be lowering rates in the setting of a strong economy? I do. But I don't think it matters what I think. As economies waver and rates drop worldwide, the U.S. dollar remains firm. I'm long into the weekend. I did use multiple butterflies as cheap insurance against my Amazon. I will add this to my next live meeting as I found a very cheap way to insure an expensive stock. I've used it for several quarters on my big holdings. I still have Amazon 2,000 puts in play to protect my position because right now it looks like a short rather than a long, but I'll cover it the minute that changes. Another big week of earnings on tap, and do you know your dates? So I went to Google, I typed the magic words. What happens when the Fed lowers rates in a strong economy? And if you look back over nearly 50 years of forward market returns following an initial Fed rate cut during expansionary periods from U.S. global investors, you can see median and averages are up, whether you look at 3, 6, 9, and 12 months. Probably a good story for being long. So let's go through a quick top-down review. And for those of you who have not been here before, I hope you find this interesting. This really was not a slide presentation. As I started the presentation with, I'm really not here to sell you anything. I'm showing you how I use my tools, but it's quicker for me to put some of those things that I looked at actually into a PowerPoint rather than flip through them one at a time, and I want to do it for the speed. Now, sometimes this works, sometimes it doesn't work. I'll open up TradeStation here, I hope. And I want to look at my major markets. And I want to show you something that's got me a little bit nervous. And those that have been with me before know how important extension is to me. Here is the E-minis. We had a buy signal come in here. The green arrow, that's a John Person buy signal. You see it on the daily, weekly, and monthlies. We got a green paint bar. Green is bullish, blue is neutral, red is bearish, so that's great. These red dots here on the weekly are telling me we're starting to get extended and maybe have some MACD divergence. That's potentially a concern. But where I'm concerned is if I go down here to my high jump, I'm looking at the delta between the closing price and 3 moving averages. I add it together, I get a raw score. That raw score is meaningless because it's got to do with how, it'll vary based upon stock pricing. I then compare that raw score back 200 paint bars and I ask, how high is that raw score compared to the highest bar going back the last 200 trading days? On the E-minis, we are at 97%. That means we're about as extended as we've gotten. I take that plus this MACD divergence. I don't stump my positions, but I'm aware that a sideways move or a pullback is probably in the offerings, and we know about seasonality now. I look at the Dow futures, everything is different a little bit because you've got the sell signal on the daily, still long, monthly, and weekly. You've got the red MACD divergences, and you're at 91%. If I look at the NASDAQ futures, not those, these, buy signals, MACD divergence, we are at 97. Just in the past, when we get up here, yes, it can go higher, but I think risk is increasing. The Russell is at 91%, so less extended. If I go down and I look at the dollar, you can see the dollar's up at the outer envelope, but it's only at 56% extended. As I said, it's kind of been sideways over, if you look at a length of time going back to 15, we're at the top of the channel. Dollar strong, then that probably means gold is not, and gold is now in a sell signal on the daily and has come back quite a bit. All right, enough of TradeStation for now. Let's go into HGSI. Where I like to start with is to start with my major market indexes and get a sense of what's working or not. And I typically will rank them by the 2-day force. Let's see if I can find that here. I think it's under legacy views. And if not, I'll go down to my old stuff. And I don't want to have any 2-day force, major markets plus. There you go. All right, so just an aside, you're going to see some things that look a little different in HGSI than in yours. I have an indicator that I call the JAS indicator, which is a momentum indicator. I've got my own scans that I've built in, so which incorporate a Jeffrey indicator. And I am working with George and a unnamed at this time, but hopefully named soon, guru, to come up with a package from that guru that will be priced less than packages that might be available in other software. And my intent, and George's intent, I believe, is to start to bring in some other folks and their tools into the program. More to come on that later. So with a 2-day force, looking at, I don't want 2-day force, I'm sorry, I want top down, which is price and volume. You see that the strength last week was NASDAQ, mid cap, small caps. That's usually good for a growth stock investor. It was good for me. I'm back up to about 60% up on the year. The NASDAQ's up 25. I'll take that. And that's, I've been up and down to that level a couple times. Hopefully this time I'm going to break through and get up to 80%. I'd like to be plus 100% on my portfolio by year end. 50% is kind of my minimal goal. And I start the year with about $1 million in my account. With some inflows and outflows, but I don't really add any more investable funds. And right now is, not that it's anybody's business, but I usually don't want to talk my book, but I'm up at 592, so almost up 600,000 or 60%. So let's take a look and start with the S&P 500. And what I do is get a sense of what the market's doing. So I had put a box in here and I said I'd be bullish when we broke above the box, and that ultimately I'd like to see it come down and test the box, which it did. I can't say anything but except that I'm bullish on S&P 500 until it no longer meets my bullish parameters, what would make that change? This is a chandelier stop. Price above the stop is good. These are the Wilder PSAR. Price above the Wilder PSAR is good. This is a kahuna. That's a bullish momentum move. And the Bongo Weekly is my long-term trending tool, and it's green. So this is at all-time highs. No reason not to be bullish, except the high jump bar is hitting the top. So we know we're getting closer to a point where the stock gets heavy and probably reverses because of gravity. But it can still run, and I'm not calling for the end of anything right now. Day and night. Dow Jones looks just like it. Pull back a little bit into the 17, but this is that line of the box that I had written here quite some time ago. If I just want to extend this a little bit, we are still above the box. If I go look at the NASDAQ, NASDAQ had a great week this week. Sort of messed up the build of that, but above the box. And the Russell 2000, not that. The most struggling of the bunch sort of had some railroad tracks, as Scott Cohen calls them, but had a big move on Wednesday. Looked like it was turning around. Thursday, that's when we saw that HINDY on the NASDAQ was a tough day in the market. And Friday, it moved again. So is the Russell ready to break out? That would be great. What you're seeing down here is a relative strength of the instrument versus the S&P plotted in red. Blue is a moving average. When it's going down, it's clearly underperforming the S&P. And right now it's in the lower right-hand corner, so the Russell is underperforming, although it did have a good week this week. I like to look at the dollar and volatility as well. And as I said, the dollar is up at the top of its channel. And if I just take this to a monthly view, this is kind of getting to the point where going back to 2009, where the dollar starts to reverse. So maybe it isn't any kind of a shocker that the Fed is looking at a rate cut, because that may actually hurt the dollar. Volatility is in the dumps. So when the VIX is low, look out below. I don't buy that, because I can have a low VIX for an extended time and the market will do well. When the VIX goes from low to rising, that's when I get nervous. We're not there yet. And with a strong dollar, you know what gold is going to do, right? Gold is going to be selling off, and it's sitting down at a very important point. There are some out there that call for a Super Bowl run in the gold as the Fed tries to create some inflation. I've got some gold because of that, but it's certainly not overweighted. Silver, big run up, and seems to be stalling as well. And if I look at the 50 FFTY, which is an IBD 50 managed ETF, and you can see that it pulled back some and is ready to move as well. So you look at this, despite where we are in this market cycle, feels like a pretty good market. Certainly, I expect not a whole lot to happen Monday and Tuesday. And then what happens if the Fed doesn't raise? Tells us the economy is strong, the market probably sells off. If it raises 50 basis points, I don't know if that's a good sign, or will people be afraid? And so then the question is, if they do 25 points, is that going to be enough to keep the bull rolling, or this market sell off? We're going into August, folks. We haven't had a big summer slowdown. The sell in May, go away, certainly has not worked this year. It'd be interesting to see what happens. So next thing I do is I go into industry groups, and I hit that button. They pop up here. This is where I took the 2-day force. We've now got 67 groups to the upside. We weren't, I think we had like 13 to 15 last week. And to the downside on my short-term marker, I only have 2, footwear and home improvement. So clearly bullish on the very short term. If I look at a little bit longer term, push it out to 5 days, I've got 62 to the upside, and I've got 24 to the downside. So that's clearly slanted with a bullish, what's the word? A bullish slant, a bullish, you know, tailwind right now. We'll see how long it lasts for. Let's go to the 2-day ups and take a look at a couple of groups. The beauty of HGSI is I've just done a top-down review. I looked at the markets. I'm now showing you which industry groups are leading. And if I right-click on any of them, change the index group, the top stocks come up here. Now I want to make a quick adjustment here. I want to pull this up so it's above my chart. Pull this above my chart. And I'm going to show you what I'm able to do here is I'm able to go through these top groups and very quickly go through their top stocks. I'm going to double click on Alphabet. It's going to bring it up here. I look at Alphabet. Let me just talk a little bit about my chart. I know it can be scary to newbies. If I started a new company, I would say trading on the right edge. I want to be able to look at this right edge and tell you what the stock is going to do. This right edge tells me a ton. The top thing is a weekly bongo. That's my long-term trending indicator. So it's in a longer-term uptrend. The next one is my daily bongo. Those are a homemade to HGSI. I was part of the creators. That's a shorter-term trending. When I see a long-term trend and the short-term turns red, I know I've got a pullback opportunity. In the middle, I have accumulation. A bright green is it would be equivalent to a B, a dark green is an A, yellow is C, a light red is a D, and a dark red is E. Then I've got the forces. I'm not going to talk much about them. I'm about to eliminate them. I don't need them anymore. And I've added something here which I call the Jeffrey indicator that will be renamed when the new add-on comes out and the potential guru partner is identified. This is the high jump. I don't know anybody else that does the high jump except HGSI. When I get up to the top, I get nervous. That's extended. This here is Bible gap ups. There isn't one. Here is the squeeze. A Bible gap up comes from Morales and Catcher. The squeeze is a Keltner channel in Bollinger Bands, and it happens when the Bollinger Band tightens inside the Keltner channel, popularized by John Carter. Bobo breakouts and breakdowns from David Elliott. Here's my indicator plotted on the chart. Here's my indicator in a band. Pocket pivots from Morales and Catcher. Dark blue, dark red are big up and big down. Light blue, light red, little up, little down, or 5 days for little and 10 days for the big. Down here is on balance volume with a moving average. When you see a green, that is what we call the Eureka, which is the HGSI equivalent of a follow through day. When you see a red, it's called the Phoenix, which is a follow through to the downside. When I see a Eureka after a big run up, I think of irrational exuberance. When I see a Phoenix after a big pullback, I think of a irrational exuberance to the downside, and reversals are coming. This gray band here is called a bingo. It's sort of the baby out with the bathwater. Down here on the bottom, these are the kahunas. Blue is good, red is bad, and those are a big outsized movement on a given day. In gray here, we have the industry group. This here is the chandelier stop that I showed you before, above and below. And then these dots are the Wilder PSAR system. So if I look on this right edge, I see everything is trending up. High jump bar is a bad thing to me. A mobile breakout. Surprised it's not a Bible gap up. I'll have to go and do the math. Let me just see if it was a Bible gap up when I apply the rules in TradeStation. Probably microscopic on your end. Let's see, Bible gap ups. Yeah, it met the criteria. So it was at 560% of the 40-day ATR and 212% of the 100-day average of volume. So they should have fired. I don't know why they didn't fire there. It took out the chandelier stop was above, and now it's below. So it's a new, no, actually, it was already below. So it's supported there. Big price move, my indicator, pocket pivots, Kahuna. 2/3 of the group in its industry group, 2/3 of the stocks are up, and there were 4 new buys on Friday. I learned a lot on that right edge. I can't chase this. It moved too far. I would go next. And since the next is also Alphabet, I'd go one more. Twitter, move up here, probably on earnings last time. Big gap up here, Bible gap up, mobile breakout, Kahuna. It looks very strong. It's not my kind of stock. It's not quite at the high jump bar. I think, is this the earnings? Earnings did come out this week, and it gapped up on the earnings. And that means it came out here as well. And look what happened last time on earnings. Big move up and trended down to earnings again. I'm not a Twitterite. I probably won't take it. Snap has been a great mover, but it's been a great mover for me because it pulls back in an uptrend, gets momentum and moves again, pulls back in an uptrend and moves again. That's what I'm looking for. It's already moved. I don't chase. And that gets me to the group. So I'll go down the top 10. I'll go down the first couple. I know no one wants a long video on a Sunday in the summertime. I don't like giving long ones. Smith Micro, another viable gap up here, out of too far for me to chase. Monotype imaging, viable gap up. Zoom video. IPO, great uptrend. Had a, I don't call it a weekly bullish or high close doji because it was in an uptrend. Yeah, it's an IPO. Some people wait till IPOs take out their reaction highs and they go long. We're getting close there. Twilio, I am long. Beautiful uptrend. Not as tight as I would like, but great uptrend. Moving again. Earnings come out on Wednesday. I'll have to make a decision to stay long, put some protection on, or take my profits. Take Two Interactive. Earnings are out. Tight uptrend, looks great. It's expensive at the high jump. I certainly wouldn't be selling it if I had been smart enough to buy it. DocuSign I thought looked interesting. I like to find stocks where the red line is about to cross above the blue on the weekly, showing that its relative strength versus S&P 500 is improving. I've got a Kahuna and a pocket pivot and my indicator fired, a mobile breakout from a squeeze. The only demerit here is the weekly bongo is red, but it's something I'm going to consider. It's on my buy list. Lots of beautiful stocks. This is what happens in the setting of a strong market. Telecom carriers, T-Mobile and Sprint announced their merger, so I don't play merger mania, but I do look at AT and say, boy, don't you wish you would have bought it down here when I was calling it out at 30? You know, you got 10% growth and a 6% dividend. What's not to love? That's why I called it. To me, it's still viable up here, although I'd much rather buy it closer to 30. Vodafone, I actually talked about this on a video down here, and I said, you know, this thing looks like it wants to go higher. I didn't buy it because, A, I don't know anything about it. It's really down in its pattern. Boy, it had a big move on Friday, didn't it? The reason why I was attracted to it, it pays a big dividend. Verizon underperforming as a stock, but 4.2%. All right, then I go to infrastructure support. Microsoft versus Amazon. The two of them are finalists for a 10 billion or trillion, a huge Department of Defense cloud project. One of them wins and one of them loses. Decision mid-August. I'd probably either be out of both or owning both going into it with protection on my Amazon. I think it's a mover, big mover, whoever gets it. What a beautiful uptrend. Look at this on the weekly, how tight and how great it's doing. Hard to buy a stock at its highest price. Earnings are out. Like I said, big news coming in. It's hard. This one is expensive, but expensive stocks have been working. IPO. Here's another stock that doesn't make money, a chart pattern very reminiscent of Twilio. You can see a lot of stocks have run. Here was a beautiful pattern of pullback, but it had a Bible gap up and it's running. It's up at the high jump. Globalscape, don't know anything about it. I wasn't in it. So I go through the top 10. So I left click, so I highlight it, I right click, change an index group. I still like regional banks. Let's look at them and see which one looks interesting. Here's a stock that's been in a long-term downtrend, higher lows, higher highs, broke above the 200. Here's the industry group coming out of a squeeze. Pocket pivots and kahunas on multiple days. Everything is green, about to break on the weekly. I like SVB Financial. It's expensive. How about some others? US Bancorp, already running. This is what you want to see when you buy a stock. Global breakout squeeze, my indicator, pocket pivots, and kahunas. Grupo Financial Gala, uptrend pull. It's an international bank. I think I've got to do more research. I like the pattern. Good. Zion showed up on a number of my scans, still low in its pattern. Probably would find something that's already defined an uptrend. Here's another international bank, full back to the 50. All my signals are firing. Huntington Bank shares, another one that looks interesting, but already running. Regions I bought this week didn't move as much as some of the others. 1, 2, 3, 4, 5. I liked it on Friday. I liked it better on Tuesday, and I went long as it broke above its 200. Notice it broke above on the weekly. I'm hopefully going to ride that for a while. 3.5. KeyCore also bought, similar pattern. 2, 3. So regional banks look interesting. IT services. First Data Corp, old name, Bible gap up on Friday. Looks great on the weekly. It's just extended. Makes money. Team, a nice run up, sideways move. I like this one a lot. Pull back to support. There you go, right edge. Everything's green. Bible gap up, mobile breakout from a squeeze. My indicator, pocket pivots, and kahunas. There are ways to play Bible gap ups. Read about it. Rouse and Catchers, Gilmo report. Look them up on the web. They have some good information on their website. Internet-based services. Whoops. Trade desk. Man, this is one of those I had early and I sold too soon. Hard for me to chase this. It makes money. Trades at a big PE. It's not at the high jump. Maybe it's not chasing it bad here. It's up here. It's an expensive stock. I can't chase too much risk. Real pay, less chasing, breaking out as well. All right, I'm getting tired, so that's enough to the long side. There isn't much to show you the short side. Let's take a look at the stocks that I thought were interesting this week. I'll call out some of the trades I'm making, and then I'm going to say goodbye. So I'm going to go into July 28th, find my buy watch. And here are the stocks that are on my buy watch going into this week. What does it mean to be on my buy watch? I'd rather narrow the playing field from 8,000 stocks down to these 50. I'll add to them each day based upon market changes. You've seen many of these already from the top-down approach. These came out of my bottoms-up approach. If you go into Thinkorswim, and I go into Market Watch, they're here. I have a number of indicators that are proprietary. This 1.0, that is a strong buy signal that can pop up. That will show up on this scan here. I've got the chandeliers. I've got my relative strength crossing. Thank you, Bob Meager. I've got earnings dates, so I'll be watching that during the day. I might be doing some scans. In TradeStation, it's called Radar Screen. It's actually better in Radar Screen than it is in Thinkorswim because I could put 1,000 instruments here, and I do. And on a big monitor, this really hums and includes all John Person stuff over far on the right as well. So I can do a lot. So I create my watch list and then I watch and see what happens with them during the week. So let's take a look first at, let's blow this up. Let's look at industry groups. Application software. Here was a stock. I love this pattern. We talk about Ceridian, HCM Holdings, Inc. I have no idea what this company does, don't really care. I see a company that's got earnings per share growth, not huge earnings, but big growth rates. PE is astronomical, don't like that. I see a stock that's been going sideways since March. I see a stock breaking out with a chandelier flip-flop, a PSAR reversal, mobile breakup from a squeeze, pocket pivots and kahunas in a strong group. Ceridian, HCM Holdings. All right, I like that. DocuSign, we already looked at. Guidewire is another technology sideways move. Now this one is probably more interesting because this does count as a high close doji because the stock was in a downtrend. So I can add that to momentum signals. That's why that's on my buy watch list. I don't buy it because it's here. I'll probably work up several of these and put buy stops and trading plans in them. Omnicell is something that's sold off on one of those bear short stock guys that puts out notes after they've already shorted the stock. SPS Commerce, sideways move, Bible gap up. There's lots of gas in the tank built up here. SS&C, another sideways move. You notice the story here, a lot of basing with momentum coming in. So I like application software. Zynga, if it wasn't having earnings out this week, I'd probably be buying it. I may watch it. Sideways move, breaking out. This is what I like to see. Okay, we looked at some of the banks. We saw this on a center state. Long breaking above the 200, couple kahunas, pocket pivots out of a squeeze, breaking above here. This one looks good, 1.7% dividend. There's lots of them that look good. Fifth Third is already broken out. First Horizon has broken out and running. Now, that's a big move already, and that's bad. But look at what's sitting over here. This stock has come down a long way, could have more to run. Huntington, I pointed out already. I like that one. KeyCore, I already am in. PacWest, sideways move, pokes above the 200. Give me some momentum, pays a 6% dividend. And then I talked about SVB, and I really like this pattern of sticking its nose up here with a bunch of momentum coming in. Western Alliance is another one. It's already broken out. In healthcare, CRISPR, I've been in and out of this stock. I would much rather buy a stock down here than buy it up here. It's at the high jump. It just feels like it's going to run again. They do some DNA editing there. It's a great company. I'm interested in that again. This was a bottom fish, International Game Technology. I've got a stock that's going sideways that's gone nowhere. I look over here and I see it perking its head up here. I notice my indicator fired a weekly kahuna, pocket pivot kahuna, mobile breakout from a squeeze. And it brings me back memories of a small stock called Tandem, which was doing the same thing after a huge sell-off. IGT looks interesting. Netgear is a communications equipment, sort of a beat-up stock that had a big move up here. See anything else that I really liked that's worth telling you about? Couple of REITs. Here's an uptrend. Every time it pulls back, it's become good buying opportunities. Pull back. Looks like it's running again. This is Every Holdings. Wells Fargo looks like some of the smaller banks poking its head now above. This is a laggard, does pay a 3.6% dividend. Etsy is a company that I've been owner for a long time. I've been in, I'm now out, but I'm thinking about getting back in. Sideways move, getting ready for another run. Earnings this week, that's why I'm out. Overstock, earnings in 2 weeks. Probably has a Bitcoin play as well, and Bitcoin is moving again, according to my son. Consolidating after breaking above the 200. That's interesting to me, at least worth watching. Flextronics, a third-party manufacturer of electronics, breaking out here. Stock was much higher before. Some earnings coming in that interested me. Invitae is a biotech, a healthcare services. I think they create testing. Run up, pull back, run up, breaking out here. I still have a position. Global breakout from a squeeze, pocket pivots and kahunas. TriPoint Homes. When I did my live program, I gave you MTH. I actually ended up buying it and had a huge move on Thursday, which made Thursday a good day for me instead of a bad day. Thank you, MTH. TriPoint Homes, sideways move. Looks like it's starting its breakout. High close doji, breaking above relative strength there. Morgan Stanley, earnings are out. I love this pattern. You've seen this pattern before. This is Survey Monkey. I wish I loved it 5 to 10 days ago, but it didn't show up on my scans. Weekly HCD as well, pullback. I think this looks very interesting. It is an IPO. Telaria is another internet stock. Don't know anything about it. All I know is uptrend, sideways. My indicator, kahuna, in a squeeze, looks interesting. Yext, another internet mediate, sideways, breaking out here from a squeeze, had a mobile breakout. My indicator, pocket pivots and kahunas, looks good on the weekly. I like that pattern a lot. Team we looked at already. First Data we looked at already. A number of insurers look good. They've had a huge run, got expensive. This is MetLife. Sideways move, mobile breakout from a squeeze and a kahuna. Does it want to go higher? 3.4% dividend. National Instruments, one of the few industrials on my list. I'm not sure why I liked it. I liked it because the high close doji, the relative strength change on the weekly, a bunch of pocket pivots. It's a watch list. It's not a buy list. PaySign is one of these hot groups, payment processors, pull back to the 50, free parking. I don't buy it here, but what I might do is say I would buy it if it got above, say, its chandelier stop. So I'm going to put it on my watch list. I'm going to wait and see what happens. This is a group that's done very well. I probably also check the news and see why it stubbed its toe. Manpower, pullback, waiting for momentum. That what I probably on my list. It says pullback, waiting for a signal. Cold storage, nice uptrend. Buy it on support. It just pulled back to the 50 with some momentum coming in. Hudson Pacific Properties, sort of sideways, looks like it's breaking out here, 2.8% dividend. Cree looks like it's starting to run again. When I see multiple kahunas in a row, pocket pig if it's mobile breakout from a squeeze. A better buy would have been on Monday or Tuesday, but I don't think this one's run away, and I'll be watching that one. Gap is bottom fish. Here's probably one of my favorite stocks, Axosome. I think this one's getting ready to run again. I already have a position. I will work this one up before we go and show you how I might play that one. Neuroquin Biosciences, I like this because where it's sitting here, breaking out above the 200 with the kahuna. Talk about AT&T already. Diebold Nixdorf, technology company, big breakout. This is what you want to buy. You want to buy it down here. Has it gone too far? It's a viable gap up. I know the rules. Great earnings per share growth coming in. After losing money, probably something I'll look at playing, but I'll use and catch the rules. Republic Services, um, open down, close big after earnings, high close doji. That is an interesting pattern, and a pattern in my experience usually goes higher. And I think we're getting near the end of the list. We are. So let's take a look at Axisome and talk about how I might play that and turn a good looking chart into a potential purchase. So let's see why I like this stock. It's in an uptrend. It's relatively tight. It has pulled back towards the 200 on numerous occasions, and each time it's gone up further. Okay. It doesn't make money. It's a developmental biotech, so I'm not going to look that much at the fundamentals. Somebody's buying it. Of course, they're buying it. It's run from 8 to 27. But you see 4.9% demand and supply. That's big. I look at the weekly. It's in a strong uptrend. Give a little flag. It looks like it's breaking out again, or it's broken out. So I would be interested in buying it. Now, what I would probably do is say, this is resistance where I just drew that line. I don't know what the price is at resistance. So let's go into TradeStation. It's funny, I gave this to my son. He asked me, tell me what stock to buy, and it must have been on Monday or Tuesday. It was Tuesday. So he bought it on Tuesday. And then he got mad at me, or he bought it on Monday, and then he got mad because it dropped on Tuesday, Wednesday, Thursday. Do you think he called me on Friday to tell me how great it was? No. He was mad at me for the first couple of days. So I would have wanted to buy it above this trend line, which we're done. I also want to buy it above this level here too. Let's hide this bar. 27.87. That looks like the high. So if I'm interested in buying this, I'd probably start thinking at it at 27.90. So I set a new high. My stop, I could pick a couple of different stops. The stop's going to be far, unfortunately. It could be on this green trend line, which is 25.04. That's probably not a bad stop. That's $2.80, but it's about 10% too much for me. This star here in the low was what? Low on this one is, hold on, let me get 25.44. Low on this one is 25.01. Well, we're getting to a certain number. Low here. All right, I'm going to give it a lot of room. I'm going to put my stop at 25.05, right above that trend line. The trend line's going up, so tomorrow, let's see what happens tomorrow. Tomorrow, that trend line is at what? 25.14. All right, 25.10. So I would put my stop at 25.10. All right, so I'm risking $2.80. That is a lot for me to risk, but unfortunately, in a smaller stock like this, that's what happens. So I've got a stock that's pulled back even on a longer period of time. It's broken above a trend line. I have trend line support not too far away. That's bullish, coming out of a squeeze. All my dots are there. Bongos are good. I like that play. So now I like to go in, and people have been with me before know what I'm going to do. I'm going to go pull up my Tom Joseph options program called Options Pro. This is called Options Pro when you get it through VectorVest. And there are options here because I think I entered my position originally with options. Now, I have a lot of windows open because of what we did last week with Amazon. So I want to do, first thing I want to do is I want to shut down Thinkorswim. I'm going to free up some resources. All right. Now I want to go back. All right. Since I'm going to end up doing the same analysis, I'm not going to kill that yet. But let's work into spreads. AXSM. I'm interested in being bullish. Long a stock, long a call, short a put, bull call, bull put, synthetic long. All right. These are the trades, and it's a cheap stock, so 5 wide is minimum range. I'm going to play for 5. And I'm interested in looking at spread a couple different. I'll leave it right here. And I'm going to look at September because August is too close. All right. So these are the different option plays I could do. And I'm looking at one option, which means I'm controlling 100 shares. So if I was to look at Axosome, and I was to buy 100 shares, it would cost me $27.69. I'd have infinite gains, and I could lose my entire investment. That's buying the stock. You all know that. I'm not telling you something you don't know. What if I bought a call? If I bought a call, what happens is it's much cheaper. Instead of spending $2,700 to own the position, I only got to spend $336. Unlike a stock, I've capped my losses at the price of the option. What's wrong here? I have an at-the-money call, and the stock has to move $3 between now and then. And I don't know if there's some news. I'd look into that for me to be profitable. That's a big move. I don't like that trade. All right. I could short a put. So what's going to happen here is I'm going to sell you a put at the money. You're going to give me $3. Now, if the stock drops $2, I get to buy the stock for $25.50, which is $27.50, actually for $24.50, because let's say it stays, let me say that again. Let's say the stock drops to 25. I have to buy your stock at $27.50. But since you gave me $3.05, I'm really paying $24.45. So I'm able to buy a stock that I want today cheaper if it drops. And you're paying me to do that. So the problem with this trade is, well, the good side is I get paid money. I put $300 in my pocket. The bad news is I've got the complete risk of the stock if it drops. If it doesn't move in my direction, if it goes, stock goes up in dollar value, I win. Even if it moves against me, it's got to drop more than $3 or 10% for me to start losing. The problem with this trade is I'm bullish on Axosome, and all I can make is the premium. So I don't want to do that one either. How about a bull call spread? This is a trade that I would consider. In this trade, I'm going to have the benefits of the call, meaning I don't have unlimited loss. But instead of paying $300 to have the upside, I'm only paying $200 because I'm selling a call for $1.32. So the good news on a bull call spread is My out-of-pocket is less. I still can capture a lot of the gains. And my risk is less because what I lose if I'm wrong is the premium, and I have less premium. Why is this a bad trade? If I'm really bullish, do I really want to cap my gains? That's a decision. The more mature and older I get, the more I realize that that's not a bad thing to do. A bear put spread says, I think the stock's going up. So what I'm going to do is I'm going to sell you the right to buy, to sell me the stock rather at 27.50, but I'm going to buy something at 22.50. So unlike a naked put, I'm reducing my loss, but my gain is going to be less because I'm having to buy a call, not just sell a call. Again, I don't love this trade because I've limited my upside. Smart people in the world would be selling puts all day long on a good stock because they know that's how they make money over the long run. One of my favorite things to do is to do a synthetic stock. And I'll ask you, what is the P&L curve look like on a synthetic stock? And then I'll pull this next to it, and hopefully you'll realize that a synthetic stock can be a way to enter a position where your risk looks just like buying the stock, but instead of putting $27.60 out of your pocket, you only have to put out the cost. In this case, you get $30 because you're selling a put, which is paying for your call. Now, if you have good money management skills, and what do I mean by that? I was going to buy 10 calls or 1,000 shares here, okay? Then I should only do 10 contracts here. Some people stupidly will say, well, if I'm willing to risk 3,000, then I could buy, 10 will cost me 300. So I could do 100 contracts and control 10,000 shares of stock. That's great if it goes up, but if it goes down, you're bankrupt. So you have to use position sizing. So that is a trade that I like, but it's not the trade I'm going to take. Let me show you the trade I would take, or at least think about taking. I'm going to start again with a synthetic stock. And what I'm going to do now is I'm going to cap my losses on it. And I'm going to cap my losses because I'm going to buy a put. And I'm going to buy a put at, say, $25.50, $25. So now all of a sudden, what I have is a similar trade to owning a call where I've got unlimited upside. I've capped my downside. I'm not having to pay $3,000 or $27.69 to get in. I'm not having infinite downside. I found a trade that allows me to have less money in, infinite upside, and capping my risk. Now, the risk on a plain call was only $300, but to get there, I had to spend more money. I like that trade. It's two separate trades, a long call and a short bear put, or long a put spread. I take that trade all day, every day. I just watch my contract size, and I don't buy more than I would have bought of the stock because I have the same downside risk. Now, I said a word. Let me just follow up on it right now. I've been trying to learn new content in case I do a meeting in October. So I've decided there's another play here. And I've been playing butterflies. And I like long butterflies. So let's look at a butterfly here. Before I do that, I got to construct it better. If I go back to the stock, I'm going to buy it at let's say $28, $27.50. What is my target? Because with a butterfly, I need to have timing and I need to have a target. So it makes it a little bit tougher for some people. Say my target's up there. So that here is at about $30. Now, this is going to be a tough butterfly. Now, the way that it's running, it's going to take probably a long time to get there. All right. So what I could do, and this stock may not play well with a butterfly, is I could design a butterfly. All right, we'll see what they gave me. And then play with it from there. Let me go back here. So in a butterfly, it's a very safe trade to make. The reason why it's a safe trade is your downside is limited by how much premium you're paying to buy this butterfly. The problem with the butterfly is you have to pick the prices. I have three strike prices at play here. I have the strike price of the long instrument, which is deep in the money on this trade at $23.54. I have a strike price on the short instrument, which is kind of at the money. I probably would do some adjusting. And then I have a strike price of the second long, which is at 31. If you look up here, or excuse me, 32.50. I'm sorry. This is it's 31 where it's profitable. As long as the price stays between 23.51 and 31.50, I make money on this trade. So I buy at call deep in the money that's expensive. I sell two calls that are at the money to pay for it. And then I buy a call that's out of the money on the other side. Because I got two short calls, I have to have two long calls. Now, if I did that trade, it cost me $102.50. There is no other impact on my margin account. So I could buy a lot of these. Again, I got to set my parameters. The stock starts to move up. What's in play here is my long call because the short puts don't kick in until a short call until I get to 27.50. So if the stock closes anywhere between 22.50 plus the $1.25 or whatever I had to pay to get in, and I guess it looks like that number is 23.53. As long as the stock is above 23.53, even if it falls from the current price, I make money. If it gets to this peak here, I make maximum money. Now, what happens if the price continues to rise? Well, that second call, so the first call cancels out my initial call, and I got max profits on that spread. Now the price goes higher. My profits drop because I've got a short spread at the same strike price short and then long here. But I have all the way until this point here, 31.45, before I lose money. Now, since I don't think this is going above 30, if I did this spread and it finished anywhere between 26.50, let's put this here, or 28.50, I'm going to make $300 for every 102 I risk. That's not a bad return, is it? 3 to 1. Again, the most I can lose is the premium I paid. What hurts, and this happened to me on CMG, I had one and the price moved to here. So even though I was correct on the stock, the time it took to move, the price moved so much that I was able to, that I got out of the green and into the red. That's the fear. I'm going to learn more about these and how to apply them and the butterfly condor. And I'm going to add that to my repertoire. Let me just show you Amazon. Let me go out of this for a second. And then I got to say goodbye because I'm getting tired. I know you're tired of hearing me. So when I took my trade, Amazon was a little bit more money. But so what I did is, and I can do this. Well, I'm probably not going to do it. All right, I sold, so I bought, these are puts. And it's not going to be right because it's not the right day that I did. I'm just going to show you what I did. Is I was able to buy a $2,000 put. I sold two $1,900 puts. And I bought an $1,800 put. So this is very wide, which means I'm protected essentially to 1,800, but I max out my protection at 1,900. So I created a butterfly that said, if the price drops, my put, which was close to at the money, goes up every dollar that the price drops. That's awesome. At $1,900, that put is worth a lot of money. It's basically worth 100,000, or I don't know the number of stocks. 10,000 minus 21, it's worth $7,000. So I am able, if it goes to $1,900, I will capture 80% of what I lost on that Amazon. The other 20% was the cost of the trade. If it drops below 800, I will have more and more erosion of my profits. If it gets to 1,800, I'll be in trouble. I will have been out of my Amazon long before that happens. What I was looking for was not to spend $30 or $40 or $50 a contract or $100 a contract before earnings. How could I do something cheap? And I paid about $23 for this contract. And what it does, it gives me very wide spread. Now, the funny thing is, and I'll do this live, but I'm not going to do it now, is I sold 3 or 4 other butterflies. So I had a green bar everywhere between 1,800 and 2,100. So it had to go outside that for me to lose money, and that included the cost of the butterflies. We'll talk about that at another date. Interesting week with the Fed cut coming. Trade safe. Be careful. Don't forget it's August. And more to follow about a live meeting. Thanks, everybody, and goodbye.